All right, all right, all right. Here we go. So we're going to cover macroeconomic information on the front end of this call. And then on the back half, I'm hoping to cover some miscellaneous items that will contribute to your bull run success, whether that be questions, general or specific questions that you have. That the chat is open. That's what it's there for. Um, I'm going to revisit our previous module where we talk about concentrated liquidity mining and just a few follow-up tips and tricks there. And then, of course, if we have time, I always like to dive into altcoins during seasons like this because we are in a great little one of the final opportunities to really get in on great investments in the altcoin space that can 10x to 100x, maybe even this year. And so I want to just lay that agenda out, and then we're going to dive in now. I've got a lot of tabs open as usual on my screen, and we're starting here at the cryptobubbles.net. Just a good visualization of kind of what's popping and what's not moving so far this year. And then, of course, this month, it's a very mixed bag. And there's a lot of altcoin movement, but not a lot of popular token. I see a lot of new tokens popping up visually over the last few weeks. And you can toggle obviously through the days and obviously through the hours, but this is just like a good visual to look through as you're going about your day and you're researching different narratives and trying to figure out, what's strong and what's not. So this is not a training call on how to use crypto bubbles, but it's, again, a good visual. That doesn't mean we need to go buy DCB today, right? It just means that maybe it's already made its run, and that helps us kind of know where it is. But all right, let's talk macroeconomics, or really macro market economics. And markets are different things. So the information that I'm about to lay out to y'all is a possible thesis on where we are headed this quarter in the market, and how it might affect your crypto investing strategy. Remember, I'm not a financial advisor, and I'm not someone who needs to prescribe to you what you do with your money, but this is how I'm approaching the market with my money. So I just wanted to be really upfront. One interesting piece of data that I think is good is the fear and greed indicator for the crypto market. And it does exactly that. It measures people's fear and greed, their optimism, their overt optimism, their pessimism, their bearishness, their bullishness, all that good stuff. Down here, this chart's actually maybe a little bit more. The good thing is last week we were at 71 greed. What happened last week that you think may have spiked the greed indicator? Somebody in the chat or in the comments, just let me know what happened last week that made everybody, the ETF. So the ETF started trading, and we're going to talk more about ETFs in a second, but it was at 71. And then, of course, it backed off. This is good, in my opinion. This is healthy. I like this. I kind of have that feeling, and markets and investing can be emotional. Like my emotion right now that I have with the market is, I hope this doesn't happen too fast. It's kind of like my teenage daughters. Like, I want them to slow down and stop. Like, I want to freeze time a little bit. I want to enjoy the move up, and I also don't want to miss the opportunity. And so when you start seeing the fear and greed index moving up too rapidly, it could be that it's unhealthy. It's almost like a binging of that market euphoria. We don't want euphoria yet. We want there to be scaffolding built. We want there to be infrastructure and price stability built, not just with Bitcoin, but the total crypto market cap. Because if you ever see God candles on the chart or straight lines up, you can bet your bottom dollar that they're going to get knocked over like a Jenga puzzle. So by some kind of catalyst or event, or that they even got there. That God candle on the chart was there because of some kind of fabricated artificial event. I even have one in mind. If you go back to last summer when XRP defeated the SEC in a landmark judicial decision, it was huge. It is a fundamental victory, and the candle on XRP went through the roof all in one day. And if you look at it again, we're right back to where we were, and we were back to where we were very quickly on the XRP price days later. And so there's always going to be those, like, really, like, if you bought off the top of that green candle, you're in the negative now. And so you don't want those massive moves up. And if you see those massive moves up, you need to hurry up and take profits. We're talking macro market, though, not necessarily individual tokens. I just use the XRP demonstration as a memory for some of you who are around. But I like that we pulled back on the greed chart a little bit. And if you go back to 2021, we had two highs. We had the March, April 2021 high, and we had the November 2021 high. As I've stated in previous calls, the November all-time high of Bitcoin was actually not the true top. It was almost like an artificial top because of what FTX was doing to artificially purchase Bitcoin with their fake FTT coin. They were just printing before anybody figured it out. So this was kind of a house of cards moment. But the real top was back in the spring of 21. But look at the fear and greed. All this green right here is the fear and greed index going north of 80 in both situations. So again, this coaching call that we do every week is so that you can know where we are in the market. Okay. We're not near 84 yet. And so we want to keep our eye on the fear and greed index because, again, these markets are driven by narratives and emotion. I would love to say that it's driven by adoption and everybody uses Bitcoin and you can buy a Starbucks with Bitcoin and all that stuff. And someday we'll get there. We'll even I'll show you a corporation who will accept Bitcoin soon. But like, it's not about adoption. It's about you front running the narratives. It's about you knowing what people are getting excited about, because that's where the 10x, 100x gains come in, is that you're in on it before the newspapers are talking about it. You're in on it before the people at Thanksgiving and Christmas are asking you about it. You're in on it before your coworkers and your associates and your cousins are asking you about crypto, or have you heard about crypto? That's where we make our money. And that's why we do this call. So know where you are in the market. Fear and greed index, we're at 60, 63. I like that. I hope we get that a slow grind up now this spring. But I do have some information to share with you momentarily that can disrupt this. Let's talk about ETFs. Fred Krueger, he's a traditional finance guy for 30 years, moved over, orange pilled into Bitcoin. Love this guy's take. It's a very realist take. It's not a Bitcoin maximalist take, but it's good. He's got a good merger between real world and crypto world. Fred says now that that 3% of the total supply of Bitcoin is now in ETFs. That's really remarkable because it's only been trading for 4 days. 0.22% of that is in the 10 new ETFs that have been trading for only 3 days. So this tweet was from yesterday. So all that being said, the ETFs are a big deal. They were a big deal, and they weren't really a sell the news event, and they ended up not being a buy the news event. So what it was really like when we got these ETFs started trading last week was the beginning. It's kind of like when you build a campfire. You know, you have starter wood, like the dry kindling that gets things hot and fast. And then you have the log that you put on that burns through the night long term. These ETFs are going to be gradual and then sudden, their impact. They're going to be gobbling up daily supply of Bitcoin. And then all of a sudden the halving's going to happen and all of these other catalysts. And it's going to be like supply shock city. these ETFs volumes, the inflows and the outflows, they're not going to stop. This is Wall Street now. It's going to be 5 days a week, 9 to 4 every day. And so you got to understand that this machine is going to continue to gobble up the hardest money that's ever been created, which is Bitcoin. And so it's almost like this, again, gradual, and then suddenly we're going to start seeing their impact. So the ETFs were not this fireworks stand, explosive, climactic opportunity for Bitcoin. They are putting the better engine in the race car in terms of the charts. So this is going to be something that continues to rev up, and you're going to continue to hear about it. And there's an entire ecosystem of Twitter or X content creators now that are tracking the volumes of the ETFs every day, because they're the most popular ETFs that have ever been released. Just so y'all know, like $10 billion of volume in 2 or 3 days of trading has never been done on Wall Street, never been done. So it is a desired asset. The only reason why the price isn't skyrocketing is because of Grayscale Bitcoin Trust, which I think I've made clear in some of my Discord conversations. But basically, everyone's been buying Bitcoin, a representation of Bitcoin ownership through the Grayscale Bitcoin Trust stock securities for years at a massive 40% discount, sometimes higher. And so now they're making all those transitions and trade outs and taking profits, and Grayscale's, bleeding out basically, while all the other 9 ETFs are bringing in inflows. So anywhere between 30 and 70% of the outflows from Grayscale are being counted as sales, and then they're going back into an ETF as buy volume. And Grayscale was the largest holder of Bitcoin on the planet, with 600,000 Bitcoin at the time of the birth of the ETF last week. So we got to let that Grayscale stuff get out of the system. It's kind of like the air bubbles in the hose. We got to get the air bubbles out, and then the ETFs are going to be an absolute consumption supply shock entity. Franklin Templeton is one of those ETFs. If you're not familiar with Franklin Templeton, I mean, this is old school money at its best, and they have absolutely changed their in the last few days have whoever's running their X account, they're just talking about crypto nonstop, and they're talking like a crypto bro. Like it is the biggest about face I've seen in a traditional Wall Street institution ever. In crypto, speculation is a feature, not a bug. That is an absolute degenerate crypto degen comment if I've ever heard one. And this comment down here is talking about JP Morgan. I don't have the clip, but Jamie Dimon was in Davos talking about crypto and smart contracts. It's so funny how people have different opinions. Love him or hate him, Jamie's been a big Bitcoin enemy for years. He even yesterday he just calls it trash. But he loves blockchain and smart contracts. So it's almost like he's the opposite of a Bitcoin maximalist. He's a blockchain maximalist now, but hates Bitcoin. It's really weird. I think it's because he just doesn't want the US dollar to have a competitor, but he loves the technology platform that Ethereum and everything else has ushered in. So anyway, that's just happening. The conversation is real. Even here in this Franklin Templeton tweet on Solana, like the fact that an ETF is even talking about Solana, which is a layer 1 blockchain that was built to compete with Ethereum. And Anatoly is they're talking about the founder's vision of a single atomic state machine as a powerful use case of decentralized blockchains, lowering information asymmetry. And then they're talking about different themes or narratives on Solana that will that were happening in last quarter. So really, really, really interesting. Okay, I'm going to start getting into more meat and potatoes here. So if you're taking notes or if you've got your thinking cap on, I need you to really, really, really think here. For those of you who have retirement accounts in ETFs, by the way, I found this chart. I actually posted this on my Instagram. This chart shows that if you held 98% cash and just 2% Bitcoin, it would outperform the S&P 500 over any 4-year period. Now, let that sink in. You got a retirement account, 401k, Infidelity, or through your employer. The S&P 500 is clocking 7% a year on average over any 4-year term. Now, y'all tell me in the chat if this is not, like, I found this to be a really riveting statistic. And if you would just hold 98% cash and then have 2% exposure in Bitcoin, you would outperform the S&P 500 by on an average of 10 or 11% per year. Let that sink in. So for those of you who are thinking, maybe you have a Vanguard account and they won't let you have the Bitcoin ETF, move over to Fidelity maybe. Fidelity now has 20,000 Bitcoin with over $800 million of total value locked there. Pretty impressive. So Bitcoin as a retirement vehicle continues to be my favorite long-term asset. Okay, so we're starting to see really bullish stuff on TV and mainstream, and I've got a couple of videos I want to share this morning. This one is the Cantor Fitzgerald CEO talking about Bitcoin, but he also mentions another asset in this video that I want you to be aware of that has a lot of traditional FUD in the market. And so I wanted to just kind of let you listen to this. So let's take 2 minutes and listen to this together. I think I've got my sound on right, but I'm going to put my microphone over here. Should talk a little bit about crypto too before we finish. Oh, well, let's squeeze it in. What would you like to say? So, can you guys hear that? Can you hear the video? Just real quick in the chat. A little? Okay. Got it up as far as I can go. So.
Remember when gold ETFs started? They were very exciting in 04, and it kind of stayed steady. There was all this hype that everyone was going to buy gold, and oh, come on. So I think Bitcoin ran up. It's kind of stay steady. But when the halving comes, it's going to start to rally and grow. So Bitcoin, I think, will grow. And there's a company that I like called Tether. It's a stable coin. And I manage many of their assets. And the Tether Holdings is the name of the group. And the group, I want to say it here with you, from what we've seen, and we did a lot of work, they have the money they say they have. In the last attestation, they said they had 86 billion of assets and 83 billion of liabilities. And I've seen a whole lot, and the firm has seen a whole lot, and they have the money. And so there's always been a lot of talk. Do they have it or not? So I'm with you guys saying we've seen it and they have it.
Why am I showing you this? Because Tether is the largest stable coin on the planet. And there are a lot of Tether haters out there. And I've shared this chart with you guys. I should have had it pulled up already, but it won't take me long. So Tether, again, let's see. There's a lot of Tether haters out there, and Tether is the stable coin. And when you have a stable coin, you're supposed to have a 1-to-1 ratio with backup collateral. That is, if you've got $1 in Tether, there better be $1 in a vault somewhere in US dollars that it's representing instead of printing. There's always been this mysterious thing. Well, Cantor Fitzgerald is the wealth management portfolio manager for Tether, apparently. And Tether is a non-American entity, so we're not able to regulate them, yada yada yada. It's a global the founder's name is Justin Sun, very controversial figure. That's part of Tether's problem, is him. But remember, I've shown this chart a few times. This is the tether dominance chart, which is to say whenever you see Tether's dominance going down, the market cap of Tether's dominance against the rest of the crypto market going down, we have bull markets. Every one of these dips, we have alt seasons where you get 10x to 100x returns. And if you go back, even if you go back to our coaching calls to September 27th, okay? If you go back to our coaching calls and you go to I'm going to show you the correlation and why all this stuff matters. If you go back to September 27th, remember we had our 100x to 1000x challenge call where I identified 10 tokens that I think can 100x in this market. That was September 27th. Mark that in your brain. And then if you go over here and you look at this date is October 23rd. So 1 month prior. No, September 27th is about right here where my mouse is. Right here, when the dominance fell off the cliff was about 2 weeks later. Boom. Well, what has that portfolio done? The 100x. Well, so far, it's been hovering around a 100% gain. So if you would have bought the 10 tokens that we talked about, and I'm going to talk about these more before we finish. At that time, all this tether printing is creating the accretive value in the rest of the ecosystem. And this is just 10. These are just 10 tokens that I've done research on. Okay. If you look at the total market cap, let's see if I can add the total 2 market cap laid over here. Yes. So total 2 market cap is all of crypto minus Bitcoin. Just look. When the USDT dominance drops, the total market cap of crypto goes up. Right here, it's doing that. Right here, it's doing that. Right here, it did that. So it's something to pay attention to. We have traditional financial CEOs in Davos on Bloomberg talking about Tether, and we've seen over $4 or $5 billion of Tether being printed since January 1st. That is minted. That is injected into the ecosystem for people to use and buy it or buy crypto with, because normally people don't just hold Tether. Generally speaking, they have it so that they can go buy. It's dry gunpowder. And during buying opportunities, they swap the Tether or the USDC, whatever it might be. You could probably do a USDC dominance chart and find the same information. Then we've got the old presidential candidate here.
Tonight, I'm also making another promise to protect Americans from government tyranny. As your president, I will never allow the creation of a central bank digital currency. You know about that?
Ooh.
Tonight, I'm also making.
He said, you know about that? Ooh. So you've got 80 plus year old politicians now talking about the pros and the cons of blockchain futures and what we're going to do with it from a government standpoint. So there's a lot of, like, if this is being talked about on the campaign trail, that means the alternative to central bank digital currencies are for us to be able to steward and hold in custody our own digital assets and our own financial ecosystems. So we don't want CBDCs, by the way. I'm going to post this link. If you have a friend, a relative, or a child that you want to learn about money and what it means to have hard money and a sound money policy or a sound money system through Bitcoin, this cartoon is 5.5 minutes long. It's one of the best explanations, both historically and in a way that anyone can understand it. So I just posted that in the chat. And I'll also post it in our member Discord if you want to access that. Next up, sometimes linear chart can help to put things into perspective. We believe there is a lot more to come, especially after the halving. So I want to talk about now, where are we? So I've shown similar charts like this before, but basically this is 2016, this is 2020, both of the last two cycle run-ups. We have a little pre-cycle run-up peak, and it really looks like we're doing that right now. Very interesting. If you can see this green box, it all seems to be patternistic and very much, in my opinion, probably how history is going to rhyme. Now, how severe this little red candle is going to be, these are weekly candles, I believe. This is a weekly chart. So depending on how severe these weekly candles are is really impossible to know, but they can be very brief. Like we could see 2, 3, 4, 5, 6 weeks of pullback, and then we got nothing but net. Obviously, you can't tell on this chart, but like there's a big pullback right there. There's a big pullback right there. And I think I have a better image here. So Titan of crypto here, $34,000 of Bitcoin by halving. Okay. So there's a little thesis here developing based on data that we're going to see that big pullback as we do in bull markets. Always. There's always 30 to 40% pullbacks as we go up the hill. So for those of you who are new and you get a 30%, knock off the top of your altcoin purchase, it's very, very typical in a bull rally. You just got to keep your head on straight. In past cycles, Bitcoin price was successively at negative 56, negative 54, and negative 52% decrease from previous all-time highs when the halving occurred. Okay, so previous all-time high, knock it down negative 56, and that's where you end up at the halving. If this pattern were to repeat, Bitcoin could be gravitating towards 34,000 by next halving, which would coincide with negative 50% decrease from its previous all-time high. That would be the last chance to accumulate Bitcoin at such a price, in my opinion. So this chart kind of shows you, again, cyclically, the last 15 years or so of Bitcoin and how this little area, these kind of concentrate on the little blue areas that he's highlighted. These are all happening prior to the halving event. Our halving is in April 15th so far is the kind of when it's scheduled for mathematically. So will we be at 34,000? I think there's a strong chance that we do see a pullback. I don't know if it'll be that severe, especially also because we've had a lot of inflation. So these numbers are not inflation adjusted. So we very much could already be experiencing that negative 50% or that negative 56%, whatever the average is, before the halving because of the inflation adjusted math that I can't do on the spot on the napkin. But we're going to see turbulence, or at minimum, what kind of like what the Cantor Fitzgerald CEO said. At minimum, we're going to just see this sideways duck walk by Bitcoin. If we do, we're going to see altcoins fly here in the next few weeks, because if Bitcoin can hold the line and not dump 30 or 40%, then the market's going to have confidence to continue to rotate their profits from Bitcoin's run up of 160% for the last 12 months into smaller cap altcoins, therefore giving you and I that liquidity. We're sitting on our raft, right? We're sitting here on our raft in the water in the wave pool. And when everybody above us in the S&P 500 and the Dow Jones all-time highs and all the Bitcoin profiteers start rotating down into the altcoins that we're already sitting on our rafts holding, then our waves start to go up. And that's really kind of our next step and what we're expecting. However, it could come along with a dip. So get ready to buy the dip as well. So have some dry gunpowder, have some Tether or USDC or some cash on the sideline. You're going to get another opportunity between now and halving, is my point. And I don't know how drastic it'll be. It might be a couple of days. It could be a week or two of, oh my gosh, the sky is falling type rhetoric. And then boom, things happen. Okay, one more video. Forgive me. I hope it's okay. I just want to share some good data. I'm try to get my microphone in the right spot.
The whole point of Bitcoin is to escape the inflation vortex that has consumed all these previous empires.
The point of Bitcoin is to fix the money. And money is energy, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Either under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death. That's the problem. That's why empires collapse. That's why economies collapse. And the problem is, it's not just a problem for an individual. It's not just a problem for a family. It's a problem for every institution. It's a problem for every company. It's a problem for every city, every municipality, every government, every civilization. Keep sucking the energy out of the economy. I'm sucking the oxygen out of your system. Keep sucking the energy out of the economy. I'm sucking the oxygen out of your system.
Let's talk about this right now. So, Bitcoin is here to fix the money. Crypto is here to fix the money. But that's future state. When you hear Michael Saylor talk, he's the best ambassador that has ever walked the planet for Bitcoin. But it's future state. We don't live in that world yet. The adoption is not here yet, both corporately, institutionally, government-wise, and individual. We're not there yet. But I want to explain where we are, because it's real easy for me to watch Michael Saylor and drink the Kool-Aid and like become infatuated and blind to what's really happening in the market. Again, I love Michael Saylor. I hope he never stops what he's doing. He's an imperfect man, but he is one of the best communicators for Bitcoin and decentralized finance on the planet. Then there's realism of where you are right now in January of 2024 and what the macro market is all about. This chart right here is the reverse repo chart. And if you're unfamiliar with how the government works, is basically this is kind of like the checking account. This is like Janet Yellen's checking account over at the US Treasury. And long story short, every day, every night, the central bank, commercial banks, and the U.S. Treasury are buying and selling securities or treasuries to each other. And depending on which direction that's going, has a lot to do with the amount of liquidity in the commercial market, aka the market that you and I can make money off of. Can anybody in the chat look at this chart and tell me, going back to January of last year and seeing the trajectory of this checking account, buying treasuries from commercial banks and paying them back at higher rates. That's why you've had all your checking accounts and bank accounts and CDs start to say things like 4% and 5% again. Can anybody tell me what the inverse reaction to this right here was in a particular digital asset? If this was going down, what was going up the last year? Anybody in the chat? That's right. So this is the Bitcoin market cap, not the Bitcoin price. But as you can see, it took a while to take effect, But then finally, the market cap started going up dramatically last October. And this is the react. Now, we've got a problem though, or technically we have a problem when this guy right here drops below 200 billion. After that, it's basically out. And so then the central bank's going to have to do something. When that happens, that's usually when you might see a Federal Reserve cut interest rates. But we've got this really weird thing happening right now where the economy is still strong, the job market's still strong, GDP is still strong. Like inflation, we got a slightly higher inflation read the other day. So like higher for longer has been the Federal Reserve's theme, because they want to keep rates higher or not raise them anymore, but keep them flat, which is always good for markets. But then if they have to lower the rates like a quarter of a basis point, which 30% of the market thinks they're going to lower the interest rates in March by a quarter of a basis point, if that happens, we could see a little bit of a sag in the markets, because the markets might go, oh crap, what's wrong? Hey, Jerome Powell, hey, Janet Yellen, what are you not telling us? And then Wall Street will recover and they'll get some liquidity back. And so that theoretically, what would happen is this number would go up a little because of injection from central banks, and then it start leaking out again and the liquidity process. This is the checking account that tries to keep Joe Biden in office, if I had to put it in plain language. So they need this checking account to have money in it so that they can continue to artificially prop up the stock market so that they can have a banner year going into November elections. Capiche? That makes sense. That's about as real as it gets. Now, in an apolitical mindset, you need to know as an individual how you're going to play this. And one gentleman out there his name is Arthur Hayes, and he has a blog called Signposts over on Medium. Arthur uses very foul language. Just be ready. He's the former CTO of BitMEX Central Exchange. He has a couple of really interesting articles that I'm putting in the chat. I do not endorse his language, but I do endorse his intellect and his understanding of the markets. He's a very, very, very successful crypto investor and has been very right. And he's basically one of those people who says, hey, Bitcoin halving schmaving, nothing matters except the reverse repo and the global liquidity cycle. Nothing else matters, which is in alignment with other people that I follow, like Henrik Zeberg of the Zeberg Report. I saw a great debate between him and Raoul Paul the other day, who used to be a Goldman Sachs guy, and they just talk about the business cycles and the global liquidity cycles. And so TLDR, Arthur thinks that we're going to see a dip between now and the halving. And so this will be a great buying opportunity for a lot of you who missed the 2023, 2022 lows, but it won't be, generational buying. It's just going to be a 20 to 30% dip probably. And then we're off to the races to some parabolic euphoric stuff. So that's the thesis here. Moving forward, I'm not going to go too deep into that because these articles are very much, he writes in such a way that it's funny and, again, colorful, but he also provides a lot of empirical data that I find to be very helpful as an investor. So, all right, that wraps up our macroeconomic portion of the call. I'm going to quickly look and see if there's some chat questions or Q&A, and then I'll move on to a little bit of yield farming, liquidity pool stuff. So John's asking, how do the ETF approvals potentially change patterns of previous crypto bull runs? That seems like a potentially big X factor that we haven't experienced. I totally agree, and I don't know. I think it's a great question. Ultimately, if I'm a betting man, I think Bitcoin goes higher for longer. I don't know if I subscribe to the thesis that we have less parabola, less parabolic markets and cycles in the future. But it's a good thing to think about. Oh, and by the way, the next ETF, I mean, Eric Balchumas from Bloomberg, who is the #1 financial journalist covering all the ETFs right now, he is saying that there's a 70% chance of the Ethereum ETF being approved in May, which is crazy. I don't think there's any way Gary Gensler allows that to happen, but I could be wrong. I saw him vote yes for the ETF the other day, so that's crazy. But man, that narrative alone will run altcoins through the halving for a while. So there's just a lot of things that have never happened that they're wild card. How will Fed lowering interest rates in this year affect crypto? Analysts are estimating 3 to 6 times, possibly as soon as March. I hope that it's only 3 or less, but it could happen. I don't think, I just don't see them lowering rates as much as people think. And this whole reverse repo thesis that I just presented would say that they need to, but my guess is that they're going to find another way to inject liquidity rather than making the central bank do it. And I don't know how, but they've done it before. The reverse repo thing is just almost like a new mechanism for printing money or stimulus. They've been so like the other two catchphrases are quantitative easing and quantitative tightening. And so they've been doing what they call quantitative tightening, but the backdoor stimulus has been the reverse repo the whole time. So I actually don't think they're going to have to lower the interest rates dramatically this year. They might a few basis points, but I don't think they're going to have to do it until late 24 and 25. That if someone had me at gunpoint and said I have to choose, I would say, yeah, maybe, but maybe not in March. I think more closely like to June, the June meeting. And then from there, it's kind of hazy in my opinion. I think we've got to be ready for blow off top market between now and June or July. That's my batten down the hatches kind of message. Mike Novogratz is supposed to be on Fox Business Afternoon. Not sure if you follow him at all. I don't know him either, but they are trying to bring on a bunch of crypto experts now because of the ETFs. Yeah, Novogratz is a massive Bitcoin bull. He's one of the good guys. Yep, Tommy, right before election. This is all going to be fireworks. This is going to be an interesting market to be a part of. If your theory is true, how would the market react if they expect rates to be lowered and they don't? The market at this point doesn't want lower rates because unless the rhetoric from the Federal Reserve chairman is very dovish. That is, hey y'all, mission accomplished. We raised rates at a breakneck speed, faster than anyone has ever raised rates in history, and we did our job. Awesome. You know, if he's standing on the aircraft carrier yelling mission accomplished and said, hey, we're gonna provide a little relief and knock off the 25% basis points in March, I think the markets would dump a little bit, but then they would recover very quickly and start accelerating rapidly. If he comes out and says, hey, job market's too hot, we're keeping things steady, no cut, I think the market takes off. Because when they start seeing cuts, and I know a lot of you real estate professionals might even want the lower rates, and I totally get that. But like, usually the lower rates indicate a weakness in the economy. And when the market smells the weakness finally, or is snapped out of its stupor and gets the smelling salt on the front end of a rate lowering cycle, the markets dump. And then after quantitative tightening stops or quantitative easing starts, then you start getting the stimulus pump too. So I hope that's helpful. All right, we've got a few more minutes left. I want to quickly do a flyover of some of our 100x tokens. I looked at these tokens. I look at them almost every day. Realio, Ferrum Network, Nakamoto Games, Dion, Velo, VRA, these all have shown extreme strength. So if you're looking for buying opportunities on any of these tokens, I think you get some. I think if you have a 6 to 12 month time frame, I think now is a fine area to get invested in. If you have a shorter time frame, I think you might want to wait for a pullback potentially, because these will experience a massive pullback in the market because they are low market cap tokens. They're like feathers in the wind. They will feel the burn, but that presents good buying opportunities. I mean, Nakamoto Games has already gone from about $1.70, $1.90 this year to $1.32. So I think it's a good buying area here. I'm buying more actively right now. You kind of missed the recent Dion buying area. I think they're going to run up strong into the end of January when they launch their Odyssey network, their layer 1, and then we might see a sell-off that could coincide with this reverse repo theory. Or they might have a little sell-off, go strong, and then sell off harder in late February, early March. Regardless, I think most of these tokens are at a great spot. I'm anticipating buying a substantial amount of VRA where it's at. But since September, everything Reef and north of this line, Loop and Sphere, have underperformed, unfortunately. And that's why we have 10 tokens and not 2 tokens. But these tokens, Rio, FRM, Naka, Dion, Velo, VRA, GFAL, and Reef. GFAL is a new token. Like, it launched in the bear market last May, and it's a very, very small market cap. So the fact that it's up 26% since we bought it in September tells me that it hasn't made a move yet. And so I think we're at a potentially good buy zone here. I think you probably will get a better buy, but if you're just like wanting to lock in some and deploy some capital, GFAL and Reef are at pretty good buy spots in my opinion. So those are just some altcoin ideas for those who have not invested there yet. The top 3 or 4 have been the top 3 or 4 the entire last 4 months. And there's a reason for that. It's because when you are a UFC fighter, you pick the UFC fighter who keeps winning matches. So if that tells you anything, pick the racehorses that have shown that they are conditioned for upward trends. Just a little hint. And then as we, any questions around altcoins before I transition back over to liquidity pools real quick? I just want to make sure I get everyone taken care of. I'll tell you what, I'll come back to questions. I want to quickly touch base over here. Couple of pools. I have several wallets that I manage different pools. Right here on the Polygon network, I have one liquidity pool. This is so for those of you who are new to Get Paid Daily. If you go into your member training area, I am about to speak in reference to Module 7B. If you haven't watched Module 7B on how to create passive income with concentrated liquidity, then you might be a little out of the loop here, but that's totally fine because I want you to be able to follow along and have a little context. If you want context, go here. But for those of you who are managing your own liquidity pools, sometimes, by the way, the UI messes up, so you just have to refresh your page. I have one pool out of range. The price of this pool is outside of your current selected range. Your position is not currently earning fees. And I have one that's in range. This is the Matic Nakamoto Games pool. And the Naka price is going up and down, obviously. But someone, one of our members asked me to talk about impermanent loss. Impermanent loss is really the only big, there are other risks. If you, for example, security risks, if you invest in sketchy platforms that are rug pulls and have villainous smart contracts. But this is Uniswap. It's the largest DEX on the planet. It's very reputable. They do about $50-60 million a month of fee generation. I have Polygon Matic and Nakamoto Games split. Currently, they're balanced at 15% Matic and 85% Naka. I started, this is a give or take $10 or $15 from my initial deposit. I've collected, $50, $60 in the last couple of days of fees. I have $16.82 of unclaimed fees. So impermanent loss, to be really simple, is when you have two tokens that are both have their own price and their own movement independently of each other, like these two. Nakamoto Games could go up 20% and Matic could go up 200%. Well, if Matic goes up 200% and Nakamoto goes up 20%, impermanent loss me is the loss of opportunity that I would have had if I'd have just held Matic by itself and had my whole bag would have gone up 200% rather than having an allocation to Naka's only 20%. That's a version of impermanent loss. The other version of impermanent loss is if Matic goes down in price and Naka goes down in price or stays the same, or if one goes up and the other one goes down. There's an impermanent loss. It's impermanent. Again, keyword impermanent, because it's not permanent until you liquidate, sell, and move on. It's impermanent because there's always like an ongoing median average of impermanent loss in any pool or pair that you are using. If you have a pair like my other one with Chainlink and USDC, a stable coin, then you have Chainlink that will move up and down, and USDC that will stay the same, like my fist here. And so if Chainlink goes up, well, right now it's out of range, but let's just pretend it's 50-50 out in balance. Well, 50% of my bags in USDC, 50% of my bags in Chainlink. So only half of my bag is experiencing the accretive movement upward. So that is an impermanent loss if I'd have just been holding all of Link during that push. So when you're doing liquidity pools and you anticipate, and if you can do this, it's a really hard skill. That's why I just really like to take the fees, because I'm earning money I didn't have yesterday. I'm earning more of the underlying asset. And a lot of times, especially during sideways and accumulating areas, you're going to earn so much more of the Link than you had to begin with. And then when the price does run up, you can imbalance all the way to Link and let it ride. And then when it starts to settle and accumulate at the next price point, you can start farming again. It's kind of the strategy to avoid, quote unquote, impermanent loss, but you can't avoid it. It's always going to be there. It's part of the game. What you want is for the daily returns to outweigh any possible deviance between the two assets. And that's kind of that's the game that we play. So I just want to do a quick flyover again. If you want more control over your daily yield, then you need to exercise concentrated liquidity. You'll have a lot more opportunity. You'll be able to, you've got a lot more options. You've got a lot, it's almost like a mix and match strategy. And honestly, you can go once or twice a day. Again, 30 minutes to an hour a week. You can manage this. Right now, I could, if I wanted to, harvest my $17 and send it to my bank account and go buy lunch. Or I can buy more Matic and more Naka, or I could just buy all Naka and just start stacking Nakamoto games because I think it can 50x from here. Or I can put it right back into this farm and increase the liquidity and snowball it inside this vehicle. You have a lot of options. At the end of the day, it comes back to your flywheel. What's your strategy? And I have a contention that most people watching this video haven't spent enough time documenting not only acquiring the skills that are in our training, but documenting your strategy with the flywheel. What is the intention of your Nakamoto Matic pool? What is the intention of, if I switch over here to the Binance Smart Chain, the BNB chain, I have the GFAL USDT, which is currently out of range. So because the price of GFAL dropped below my minimum price of 34.05, I'm okay with that. I'm just going to let it hover here and I'm going to let it come back into range and I'll start acquiring more fees again. And for those of you who are like, who went through the calculator exercise on Builder Metrics and you did this calculation and you're like, oh, wow, you know, the pair that I chose said that I'm going to have, you know, like an $80 a day return. Well, yes and no. That's an average based on a lot of different variables. And so this one, for example, the GFAL USDT pair, if I do the calculations and currently if I were to put $1,000, it says I'm going to earn $131 a day at the current yearly APR. Well, the problem with this, or the potential things that would prevent that $131 from happening, are things like this. How many hours has my token price been out of range? Because when it's out of range, I'm not winning any more fees. And so it just depends on how micromanaging you want to manage that. And if you want to try to maximize that, they do have this cool tool called Aperture over here on the calculator. Again, for those of you who are new and haven't gone through the training yet, don't worry about it. This is going to be a little bit of crazy language. But go over here, sign in with your wallet, and you can actually set automated rebalancing, reinvesting. You can get it to move your price ranges for you. You can automate all of this if you want to. Okay. During times of volatility, it could be helpful. I do not have a lot of experience with this platform, but it doesn't cost any money right now. They are not charging to use this. So there's almost not much to lose, but I would recommend managing your pools manually for a little bit. And once you get the hang of it and you know what you're doing and what you want to accomplish with your flywheel, then start automating things. My whole advice is to nail it, then scale it. Nail it means I understand what I'm doing. I have a strategy and a tactical approach, and I know what outcome that I want, and I know what outcome is possible. I'm going to automate it with systems and tools so that I can get the most bang for my buck. But I don't want to start automating something I don't understand, right? You don't want to automatic rifle before you know how to shoot a weapon. So make sure you understand what's going on, and we'll go from there. So, all right, guys, I'm out of time. I'm so sorry. I need to move on to my next appointment, but this is our weekly coaching call. I hope this was helpful. Looking forward at Q1 and Q2 of 2024 and helping you increase your wealth systematically and methodically using the crypto flywheel, the narratives, and the news cycle and the business and liquidity cycle that's at our fingertips. So a lot more to come. See y'all soon. Hope you have a great week or a rest of the weekend whenever you're watching this. See ya.